go into number one, which is the sell down strategy.
Good old sell down. All right, so selling down is really where you go and build a property portfolio. Say, I'm going to use round figures, Charlie, just because I'm a simpleton. So imagine that you get to your end game, maybe retirement or wherever you see your end game going.
No, the end game is financial independence in the scope of this. That's what we're going to layer it as.
Awesome. So imagine that you hit your financial independence and you go, great, it's now point to trigger my end game, and you're executing against like a sell down. So you got $10 million in property and you might have, I don't know, $5 million worth of debt. So what you will do is you'll sell down property. You could do it in one lump sum. You could do it progressively to start paying down the debt on the properties that you are going to retain. And now the reason that you will retain these properties is because no debt on property means that all of the rent that you earn is the cash flow into your personal income. And so essentially what you're doing is you're buying assets that will grow over a period of time, and then you will use that growth to sell down and pay off remaining debt. And that is really sell down.
I'm going to have to throw more layers into that.
Let's do it.
That is not only it. There's more to this one.
Dude, there is a lot more.
So first
sell
off,
down is like so many layers.
Pretend you've got 12 properties and they're worth $1 million each, right? It's like you would actually sell 7 to keep 5 because of the tax.
Yeah.
And you, in many cases, not all, depending on your tax, to your point is many people sell them down progressively so they can strategically get the tax thing right as well. So if you're in a sell down strategy, it might actually take you 5 years to sell down a number of properties to execute this as part of your plan. Another point here is that for many people, it's not just selling them down to pay off of the debts. They'll sell them down just to live off the profits.
Keep the cash. Yep.
Yeah. So it's like I've very much seen the idea that someone will sell a property and just merely have it there that's their income. That's what they're going to live off in the next duration. So,
yeah. I've seen both of those where people have, sold down to pay off debt on other properties to live off cash flow, or other people they might have 10 properties and they'll just sell down a property every 2 years and live off the proceeds of the property they've sold down, or even a couple of different ways around it. The funny thing has been, from what I've seen, is how people assess the properties that they sell down versus the ones that they keep, which is one of those views that I'm like, that's just a piece that I never thought of. It's like when you get to that layer, sometimes they sell down the highest valued properties with the lower debt on it to utilize the equity they have to go and pay down more properties. So in this example, imagine you've got 2 houses that are worth $2 million a piece and the rest are worth $1 million. You might sell the $2 million properties because you've got more equity in them. So you've got more houses left to risk mitigation. So you can use that cash because there's more properties. You've got more tenants, which means that the risk is lesser versus some other ways that people approach it as well.
Completely. It might even be you sell down lower yielding properties and keep high yielding ones as an income strategy, right? There's many ways to play it. But the key one within this is that selling down assets is a part of the end game.
Yep.
For your strategy to work here, you need to sell down some things. You can't hold on to everything, or you would end up in the camp of like, what do they call it? Asset rich and cash poor.
Cash flow poor. Yep.
Yeah.
Yep.
No, go for it. Add something.
Yeah. I find this one, it's difficult to absorb for me personally, because I always look at like the capital gains tax of like the growth that your properties have had. But when I sort of apply the hat of the dentist or the government worker or something like that, where they're looking for negative gearing whilst they've got a professional career, which is essentially, how do I buy a property where that I can offset like the cost of the house against my income? I'm like, I totally get this, because they're making this win of a tax during their working career, we'll say.
Completely. And you got to remember, because they haven't sold anything, all that growth's been compounding in the background. They've been compounding in a tax-free environment.
And so then when they get to the end, because they're so accustomed to paying tax on all this, they just get to this sell down strategy, and it makes sense. Like they knew what they were going into, because on paper, losing money on property to offset tax doesn't always look the best unless you have a long view. Where for people who are going for like cash flow positive, they look at this going, poo-poo. No, I don't. Why the hell would I want to put more money in? And so once you put that hat on, this becomes so much so much more logical and easier to absorb.
Another big component of this is land tax. So if you've built a very big portfolio and have a substantial amount of debt, your land tax bill can end up immense. So selling down some of your properties can actually be it's a strategy to reduce tax in that way. So you're looking at it as like paying capital gains tax as the example, but it might be that, well, I don't have to pay 20 grand of land tax per year if I sell down some. So they have like I'm not going to say a net out, but it's not like a zero thing. It's not like you're only paying capital gains in this example. Like you've not paid tax potentially on growth along the way. And then you've also got this gain of like, well, now I don't have a future land tax bill here.
Yeah. Or I could sell down the properties that have the highest land tax bill to go and keep the ones that don't.
Completely.
Yep. It's funny. You can totally appreciate the concept of the sell down because you go, well, how does that not make sense? Whether you're selling down to keep the cash yourself or selling down to pay off debt to keep properties for cash flow, it just seems logical because when you're getting into that financial independence stage, who needs all that risk sitting across the top of you? Who needs to make sure, like, you always look over your shoulder and potentially get forced back into the workforce? Like, this is just an easy transition into now I'm just going to land into, financial independence.
A very reasonable strategy. I look at it and go, if you're comfortable with that, comfortable with this end game and you like this end game, you can align a strategy towards that. Now, if you're planning to sell down things, you would want to have to sell down things of value, right? So like align the strategy to that. There has to be some growth to sell down for this strategy to work.
Are you telling me, Charlie, that if I bought just apartments that hadn't increased in value, which historically they haven't,
you can't make it about apartments because some apartments have increased in value. But if you had chased mining yields,
that's a better example. Yes.
Yeah. So they haven't gone up in value, this strategy wouldn't work.
Yeah. Or if I've just pushed hard on cash flow, where I might have not received the capital growth, this is probably not going to be a strategy that I'm utilizing this. I can still execute it, totally execute it. But if you've gone and bought a property that's, I don't know, doubled or tripled over your investing sort of career, we'll call it, where mine hasn't, but I've had the cash flow from it, the sell down might not be the best strategy for me to execute against. I can execute. Technically, I can. It's just that if you did it against yours versus me doing it against mine and you went for growth and I went for cash flow, you would be in a better position at the end of a sell down end game than I would be.
Yeah, so the strategy of like blue chip investing or growth investing would be the one that aligns best to this if that's what you're looking to play.
All right, fellow property investor, if you loved the value from this short video and wanted to know more about how you can win at property investing, check out the full episode by clicking the link on your screen or in the description right now. Alternatively, click subscribe and you'll never miss another one of these videos.